Hello traders, hello everyone, my name is Gregor Horvat and welcome to our new video surfing the Elliott waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will look at the dollar index, euro, Aussie, Chinese yuan, dollar yen and German DAX. Now US dollar is currently trading to the upside. As expected, we are tracking wave C, and wave C actually belongs to this higher degree corrective price action. So actually I think that there will be potential limited upside here in the next few weeks, maybe during summer. Once we approach this 106 107 area, that's where we will be looking for a potential new reversal to the downside. So for now this is still a corrective stage, but still incomplete. Why I think it's incomplete? Because here I'm tracking a flat correction after this sharp drop from 2022 highs. So in a flat corrections, you will see that wave A, okay, will be made by three waves. Then wave B will fall towards these new lows, also with three waves. And then the most important part is that you will in flat see very strong wave C, which should be made by five waves and will usually take the price back to the area of this wave A resistance. So that's around 106, 105.78 actually, to be more precise. So once we will have these five subwaves within this wave C, that's when we may expect a reversal lower. So now we will take a look at the 4-hour time frame for this substructure. Well, you can clearly see here that so far, okay, let me just remove or switch the colors here. You can see here that so far we have only three waves to the upside. Okay, that's wave 1, wave 2, nice extended lag, so I think it's a wave 3, not wave C. So more upside should be seen after a pullback. So as I said earlier, wave C should be made by five waves before market may turn down. So for now this is still not a 5-wave movement from that low. So I think that there can be more upside, but I'm aware of some pullbacks here as we are approaching the 78.6% of this drop. So that's one fib level that we should pay attention on. Also, recently we have seen a reversal down here on here it is, on the 10-year US yield. So this reversal down here may put some resistance in play for the dollar index as well. So maybe there, as I said, maybe there will be some pullbacks, ideally wave 4, before market will continue higher to make the final push towards the 106 area. Okay, now let's take a look also on the euro. So on the opposite side of this, euro dollar obviously in the very similar situation. Here we have five waves up, and now I think we are in a corrective setback, and wave C could see more weakness towards 105. Looking at the 4-hour time frame, I think that we are coming here into some supports for a wave 3. Also keep in mind that there will be a new decision made from the House that will vote for the US debt ceiling. Also, we will have non-farm payrolls report on Friday. So these are some important key events that could potentially limit the current drop here. But keep in mind that I will be expecting only temporary rise before market will resume even lower. Commodity currencies are still very weak. There has been a release of the inflation figures in Australia. It came out at 6.8. So again, up from last month reading 6.3, but 6.4 was the forecast. So it's a miss of on inflation actually. Inflation again ticking up, but still Aussie is trading at the lows, and I think that this has also something to do with China, which showed some weak economic data released during Asian session. So this is China is still the main driver for the Aussie weakness, but in China they're doing everything to support, to stimulate their economy. So once they are back on track, I think that Aussie will stabilize, ideally in this 61-78% FIB area. But Looking at the 4-hour time frame again and focusing on the wave structure itself, it's still not completed here when we are tracking wave C. Wave C is a motive wave, okay? So it should be made by 5 subwaves, and for now I still think that's not the case yet. We see room for more weakness. Also, we just broke this 65.60 previous low, which already reacted as a first resistance here recently. And of course, if we see another jump into this pullback, I would be expecting that this resistance will hold once again for a final drop. Also, keep in mind that dollar Chinese yuan is trading in a wave C as well for higher degree. Again, as I said so many times, wave C is a motive wave, should be made by 5 subwaves. For now, that's still not the case yet. You can clearly see that's a wave 1, wave 2, extended wave 3. Some resistance could be seen in the near term, so more upside after wave 4. So as long this dollar Chinese yuan is trading to the upside, Aussie can stay bearish here. And also, as I said earlier, the substructure on Aussie in this downtrend is incomplete. So I think that, of course, Aussie and dollar Chinese yuan can be moving into some very interesting levels, but respecting the substructures, I think that we are not at the end of those cycles just yet. But maybe during summer or later this year, I think that those markets could see some interesting reversals. Now, since I mentioned earlier, US yields came to the downside, and this also obviously has some impact on dollar yen, which recently stopped at this upper trend line, parallel trend line of this channel, but not really falling down much. You want to see definitely a drop back below this previous swing highs at 137.80. So if we see a very strong drop, daily, weekly closes below that level, then I would be looking for this to be as a failure top and failure push to the upside for the bulls, and I would be looking for more weakness. Okay, so of course this pair will be tracked very closely if really US yields are going to see more weakness. But for now, US dollar is still very strong across the board, so definitely we'll have to be very careful with the dollar yen. Maybe yen crosses could be better pick. Now looking at German DAX, stocks recently came to the downside, and looks like that German DAX might have seen some top here because we felt at the upper trend line of this Elliott wave channel. So I think that this 5 waves up could be completed. Also, I can count 5 waves up within this 5th wave. Okay, so here is this 4-hour time frame. I see waves 1, wave 2, wave 3, wave 4, very nice consolidation, sharp move out of this consolidation, then even more stronger reversal. So this type of a price action, when you have sharp breakout and then in the next few days very strong, much stronger reversal than the previous bull run, then this to me is seen as a top formation, especially since I can count 5 waves up. Plus we can see a broken trend line when connected waves 2 and wave 4 swing lows, and this drop is also in impulsive fashion. So I think that more weakness will be seen and that we are in a corrective movement to the downside. So corrections, again, impulses are made by 5 waves and corrections should be made by 3 waves. So I will look for more weakness, more consolidation, lower price action until I see this ABC legs in place. Okay, for now, that's wave A. Wave B rally, so more weakness into the wave C, and potentially we could even break this very major level here at 15,700, because at the same time, not only that was the previous swing highs and now a new support, but also this is the level that marks the lower side, or I should say that marks the neckline support here. So potentially head and shoulder stop formation is also something that we have to consider. So if this neckline is broken, at the same time the price would most likely drop below 15,700, yes, and if we break this level, obviously we could see much lower prices here. So keep an eye on stocks as well. Okay traders, thank you very much for your attention. I hope that you enjoyed this video and talk to you soon. Bye.